Hi, I'm Keith Tokerud. I'm one of the lawyers at Tokerud and McCarty in Great Falls, Montana. And I'm sitting here today with Vanessa Bucklin from Conrad, Montana. And we want to talk about long-term care insurance. I've been doing estate planning for a number of years, and I'll usually start out, after I introduce myself, I'll ask them what concerns they have when they come in. And practically everybody is concerned about long-term care expenses. I don't care if their estate is $20 million or $50. They're concerned about nursing home expenses primarily.
Mm-hmm.
So in the old days, we didn't really have much we could do except tell them what they couldn't do and tell them about the problems. Finally, we started realizing we need to offer some solutions. We need to team up with people who do have solutions, and we need to come up with some solutions. So today, Vanessa and I want to talk a little bit about long-term care issues, questions that maybe you've had, hopefully give you some answers, give you some directions, some things to think about. That's our goal. And of course, we're going to start off with an introduction from Vanessa. So Vanessa, you and I have known each other for, what, 15 years maybe?
Least, yes.
When I first knew you were a banker.
Yes.
Well, how did you go from a banker to what you're doing now? Tell us a little bit about your professional path, would you?
Sure, I'd love to. So, Vanessa Bucklin, and I'm in Conrad, Montana. I have an agency, Pondera County Insurance, and I'm a financial services professional. So I had worked in the banking industry for about 15 years and decided that I really wanted to try it on my own and be my own business owner. So as an entrepreneur, I opened this agency from scratch. It has property casualty, life, health, investments, financial planning, and I really enjoy the estate planning piece of it. And that's what Keith and I had partnered with at the bank. It kind of hits all facets of your planning with your estate as far as your team, whether it's a banker or a financial services professional. And so it was an easy transition, and we were able to work together, to continue to work together.
Yeah. Well, I suppose I should ask you, tell us a little bit about your personal life. So I know you're married and your husband is a school superintendent.
Yes, he is. So I'm married to Tyler. He's a superintendent of schools in Sunburst, Montana, actually, and a farmer as well. And I have three beautiful children. We have three beautiful children. Claire, she will be a freshman this year. Nicholas will be a fifth grader, and Colette, we call her Coco, she'll be a third grader.
Neat.
So.
Yeah. Yep. Well, so we're here to talk about long-term care. When you think of long-term care for this, what do you think that means?
So it means a lot of things, but I think the reason we were always working on this, even when I was a banker, is it affects your retirement, it affects your estate, it affects your business, it affects everything that you're involved with in working so many years to try to save money and get to that retirement point. Long-term care affects us, really almost all of us. 72% of us are going to need some form of long-term care, and whether that means care in your home, because like you, we want you to stay in your home as long as possible, and if not forever. It's home care, and then it's nursing home care, and it's adult daycare, and it's all those things. It's a very big encompassing package.
Mm-hmm. Yeah. Well, so you mentioned 72% of people will need long-term care at some point.
Yes. That's
So
a high statistic.
as I say, everyone's concerned about it, but tell us a little bit more about what are the chances that we're looking at that, or
Sure.
how serious a threat is it really? It's scary, but really how serious is it?
So I throw out a few statistics when I talk about this. It's the chance of your home burning to the ground from now until the day you die is about 3%. The chance of you getting in a major car wreck from now into the day you die is about 18%. And the chances of you needing some form of long-term care insurance is 72%. So it's very high. And we insure our things like our home and our car, and we hope that nothing happens. But those odds are so much less than us needing some form of long-term care. So why aren't we insuring, our dignity and our care in the future? It's a high statistic.
Yeah.
So.
Yep. Well, so when people come into my office and they start talking about this, I tell them, I don't sell insurance, but when you're raising these concerns about long-term care expenses. Usually they're talking about nursing homes.
Right.
You know, and the husband says, I don't care what happens, I am not going to a nursing home, take me out to the back 40 and shoot me first.
Right.
And that's the joke, but he says that kind of half seriously.
Right.
Maybe that's not such a good thing for his kids to hear in case he ever does need to go to a nursing home, by the way.
Right.
I'll just put in that little plug for the comment. But I think for most people, you want to look at the options, and I think the first option is really long-term care insurance. I don't sell it, I don't know that much about it. I know people who do know a lot about it, and I think it's worth looking at. I do know this, that when I first delved into this area, we talked about long-term care insurance. It was kind of one family of products, and now it's kind of morphed into, we'll say, different families.
Mm-hmm.
Can you tell us a little bit about that?
Sure, I'd love to. So there's traditional long-term care that we've talked about before, and people kind of get nervous about that, and they don't realize really how affordable it is, especially considering how expensive it is to be in a nursing home. But that traditional product would be like you paying a monthly or an annual premium for a daily benefit. So you get basically a maximum daily benefit that you can use while you're in a nursing home, and you pay for that, like I said, either with an annual or a monthly premium, and you pay it until you go on claim. And so the thing that people don't like the most about that, or the complaint I get the most, is that they don't want to pay for it for all these years and then never use it. And I have them look at big mistakes and small mistakes when they say that, because if you don't have to have long-term care if you don't have long-term care needs, it's really not the worst thing in the world. It's actually great that if you don't need to go into a nursing home. So it's not the worst mistake. But on the flip side, people want an alternative to that. So we have a few hybrid products that are out in the market now, where you can get that return of premium, and you can actually get a leveraged death benefit. So for example, if you were to have money set aside for long-term care needs, which a lot of people do, they have maybe $25,000 sitting in a CD earning nothing now, especially with this environment. Instead of it sitting there, you could leverage that. So a 55-year-old could take that $25,000 and move it into a product that would leverage that to almost $75,000 in long-term care benefits. That instantly, it's a single premium, so you're not paying on it forever and maybe never using it. It's instant from $25,000 to $75,000 that you can use for long-term care. If you don't use that, or you just use a little bit of it and you die, then it leverages it to about $40,000, $45,000 in life insurance, tax-free to your beneficiaries. So that $25,000 really gets to, it's just very leveraged either for long-term care needs or life insurance needs. And those go to that life insurance goes to your beneficiaries tax-free. Okay. So it's a nice alternative. Yep. If they're worried about that.
Mm-hmm. So it's either traditional long-term care or a hybrid product, you call it life insurance, and what they call that a long-term care rider that it has.
It's a rider either on a life insurance policy, but then there's another product where it's actually a life insurance product with long-term care language written inside of it, and that's the example I gave you. So there's really 3 types, and they're kind of the same, but they're different in a single premium or an annual premium is what you're looking at.
And you mentioned a daily benefit that you're buying. What kind of numbers are we talking about?
So if you are looking at a daily benefit of, say, $200 a day, which is the average cost in Montana for a nursing home, and obviously they vary depending on what you're looking at, but for Montana, $200 a day. So that benefit, and then you can pick how many years you want to have that, whether it be 3 years, 5 years, 7 years. And that $200 a day multiplied by 7 years, so to speak, or 5 years, is going to give you your maximum daily benefit. So what that be $200,000, $219,000, or whatever your calculation is. And that for a 55-year-old, and let me back up and say a 3-year policy, $200 a day benefit is about $2,500 a year of premium. So if you think about the cost of $200 a day, that's $6,000 a month. And if it's 2 people, that's what can exhaust your retirement and all your hard work that you've done, when you can simply buy long-term care insurance for $2,500 a year. So it's a nice leverage that you're getting, and you're going to get $200 a day benefit.
Now, I've heard there's a number out there of the average length of time that people who end up spending in nursing homes would be in a nursing home. What's that number?
It's about 3.2 years. So, and we can get into like how much you want to cover. A lot of times we cover those 3 years in your daily benefit. A lot of times people want to go 5 years, just so when we get into the Medicaid discussion, it's a 5-year look back at this point. So sometimes they want to go with a 5-year benefit, but the average is 3.2 years.
Okay, so how does somebody know whether they're a good candidate for long-term care insurance?
So long-term care insurance is based on your age and your health, of course. And when you're looking at long-term care versus life insurance, you're looking at morbidity instead of mortality. So
Morbidity means what, by the way?
So morbidity is your ability to perform the activities of daily living. So there's 6 activities of daily living. And to ask me right off the cuff, it's eating, dressing, toiletering, transfer, continence. I'm going to forget the 6th one, but those basic things of living, those are the things that would go on claim, and that's what they're looking for.
So long-term care is not worried about the same things that life insurance
Not
is worried.
necessarily, no.
Yeah.
So.
Yeah. So if someone, let's say someone comes into me and I say, well, you should be thinking about long-term care insurance, and let's say they're 70 or 75, are they going to be really too old to be able to afford a decent policy, or what kind of age would you say?
So that's pushing it where they might have something which would, long-term care it's underwritten pretty strict. I can qualify someone up to age 80, and I've seen it, we've done it. But really the sweet spot that they're gonna wanna start really thinking about this is between their 50s and 60s. So like 55 is really the age that they need to start considering that. And unfortunately, we can need long-term care at young ages depending on, strokes or car wrecks or whatever, but it's better while you can qualify to obviously get qualified before you wait too long. And sometimes they do, they're starting to feel something, or they're forgetting something, and that's cognitive is a huge discussion too, as far as the underwriting. So.
Yeah. Now you mentioned, of course, traditional long-term care and the hybrid product. Can there be a difference in terms of qualifying for one versus the other? So
like I said, with the hybrid products where you're doing a single premium, those are actually life insurance contracts with long-term care language written inside them, or the rider. And so they're going to be looking at a little bit more on the life side as well as the morbidity. But they're really less strict than a traditional life insurance policy. So I see people getting approved for those products versus life insurance quite a bit. So they're more honed in on those 6 activities of daily living and your cognitive ability with long-term care.
Yep. Well, so you mentioned our work together. First time I remember working with you, you were still a banker, and you sent in some people. They were farmers from up in the Conrad area, and I think they were in their 70s, husband and wife. And I sat down with them, and I said, well, what are your concerns? And he said, well, my parents both ended up in nursing homes for more than 10 years, and when they were gone, their estate was gone. That's not going to happen to me. And I turned to her, I said, what about you? She said, well, my parents both ended up in a nursing home for more than 10 years. They lost everything, and I don't want that to happen to me.
Right.
So we had a discussion, you and I, about different options, and they ended up preparing a trust where they had transferred ownership of their land to a trust for the benefit of their son. And it was the first time I had done that, and I was a little skittish about that. So I told them to hold back some property in their name just in case things didn't work out.
Sure.
Then they came in a couple years later and said, this worked out so great, we want to transfer the rest of it in.
Right.
They were very happy, and what we ended up doing for them was a trust arrangement. Since then, we've worked on, a number of cases, and sometimes a trust is a really good option for them, where they can protect assets. Maybe they don't qualify for long-term care insurance.
Right.
Or maybe they qualify, but the premiums are high enough that to buy enough coverage would be prohibitive, but they can buy a shorter amount of coverage, which we can fold into our trust plan
Right.
to get them through what's called the penalty period for Medicaid planning. So it can be kind of a mix and match, can't it?
Definitely.
Yeah. So someone comes into you and says, well, Vanessa, I hear you sell long-term care insurance and you're working through with them. What kind of a process are you going to do to decide what tools would be best for them or how they should approach their situation?
Well, like you've talked about, I believe in the team approach as well. And so I would hopefully get them in with us together and their CPA so we can figure out, because when you're talking estate planning, I mean, you need to be serious about crossing all the T's and dotting the I's. And so I would definitely, every situation's different. I would want to have them go through an application. They're simple applications. There is no medical exam, even with the hybrid products. And so it's not like as invasive as they're used to with life insurance. But see if they qualify, because then we can pivot to other things. I would just encourage them, we need to do a plan. A plan could be doing nothing, but then they're going to be, with $6,000 a month times 2 and 10 years, really there's not a long-term care product that can cover that full period. And so we've limited that. And so doing a combination is best versus just doing nothing, because then they are going to have to sell all their assets and be on Medicaid, which, that's a whole other discussion, but it's something that they probably wouldn't strive to do, especially if, they have an estate to protect and they've worked hard to save that money. I don't think there's any retirement plan that's complete, as much as you work on saving for your retirement and you've hit your numbers and you've built your business or your farm has been in your family for generations, a retirement plan is not complete without looking at long-term care, whether that be a combination of insurance or trusts or individually. You need to look at it because it can wipe out that retirement and that hard work in a few years. So.
Well, I assume it's the same with you as it is in our office. People come in and they'll say, well, we have a nice farm or ranch north of town, south of town, somewhere, and we really want to pass that to our kids. And you'll start going through their priorities, and a lot of times that's number one.
Yes, it is.
They've got 2 or 3 kids, and one of them's gone off to Seattle and one's gone to Los Angeles. They love those kids just as much as the one who is slated to take over the farm. But the one who's slated to take over the farm, that's the one they're going to make sure is able to do so.
Right.
They're going to prioritize that.
Yep.
And to make that happen, we'll need to look and see, is that a viable operation? Can this son or daughter or son-in-law or whatever really carry it on? Do they have the cash to be able to deal with an emergency like what you're talking about and fit it together?
Right. Without having to sell land or livestock to make that happen.
Yeah.
You want to keep, the whole purpose is to keep that farm or ranch together.
Yeah.
So.
Yeah. Well, you mentioned the team-based approach. I enjoy working with you. We worked with some CPAs that are also great to work with. People need to kind of set aside their egos, set aside their own little niche, and look at the whole plan for the family to see how we can do the best job of accomplishing their purposes.
Definitely.
Yeah. Well, Vanessa, I think myself, everyone should, I don't sell insurance, but I think it's worth looking at. And if we're looking at insurance, there's probably a number of companies out there. How would a person decide? In other words, is there just one company that they'd want to consider and not consider anybody else? Or are there a number they'd want to look at? Or how would they approach that?
So I can broker through a variety of carriers, but long-term care is kind of finicky in the sense that it's actually not, the insurance is not very old. It's about 35 years old. And there were a lot of carriers in the market at first, and they were very aggressive and they weren't pricing things right. They were using old actuarial tables, and with the medical advancement, they didn't expect people to live as long as they have. So a lot of those companies and carriers have exited the market completely, or at least long-term care. and a lot of them have reduced those benefits or what you can buy. Before, you could buy an unlimited policy, so it might cover someone that lives 10 years in the nursing home, but now they've limited that to the 7-year max that you can purchase. And there are some other caveats to that. Some carriers have raised premiums to the point where it's cost prohibitive. There's about 3 really good carriers still out there that sell long-term care insurance. So it's not so much of having to pick, from a wide range of products. It's more to see, do you qualify, and then what fits best for you. And I have 3 strong companies that I can go through for that.
And when you're suggesting someone would fill out an application, if they initiate that process, does that cost them anything?
No, not at all. So it's almost like a free, and it's not a physical, depending on their age, and if they haven't seen a doctor in like the last year, they may have to go through a physical, but otherwise it's just a cognitive interview over the phone, just to make sure you don't have any signs of Alzheimer's or dementia, but it's free to them. In good faith, we ask that they submit the first month's premium on the traditional long-term care, but that's returned to them if they decide they don't want to take the offer or if they're denied. As far as the hybrid product where it's a single premium, we don't need any money up front to go through the underwriting. So it's good to find out and see where you're at, and do so while you're healthy and able to qualify.
Yeah, so if a couple came in to you and you thought, I'm not really sure they're going to qualify, if there was a reasonable possibility, would you still be willing to dive into that?
Oh, absolutely. And we have a pre-screen that we can do, and we can call in with, if they have a lot of prescriptions or they have an issue that they're worried they don't want to, go through it without finding out that would work, we can do a pre-screen for them too. So we'd absolutely do that.
Okay. Well, so I know you're in Conrad, but how would a person get hold of Vanessa Bucklin if they wanted to?
So I am in Great Falls quite a bit, at least weekly, in normal time period when it's not COVID-19, but I can be reached on my phone. 406-271-2034 is my office, and you can email me at Vanessa, VANESSA, @PCIConrad.com.
Well, Vanessa, I consider you a friend.
Yes, definitely.
And I just really enjoy working with you. I think you always put the interests of the client first, which I'd like to think all professionals did that, but not all of us do. Right. I just think you're a great team player. I'm so glad you could come and give us a little information about a subject that people are losing sleep over.
Right. Well, thank you, and I appreciate that. I think of you as a friend as well, and I've really enjoyed working with you for 10-15 years now. So
let's do another 10-15.
Yes, let's do.
Okay. Well, thanks so much. I hope folks enjoyed this, and we'll look forward to seeing you next time.